My favorite way for clients to immediately start getting ahead on their taxes by saving money is by using retirement plans. The IRS has 15 different kinds of retirement plans. I'm going to name them off. I'm not going to go through each individual one, but you can kind of get a sense for what they are. In effect, it's a vehicle where you're putting your money away, where in a way it's tax advantaged. It could be tax deferred. You could get a tax benefit. Could be contributions up to a certain dollar amount, tax deductible and tax deferred. It depends on the plan, depends on what it is. So we got IRAs, Roth IRAs, 401ks, simple 401ks, 403b. Those are, well, simple IRAs, SEP plans, SARSEPs, payroll deduction IRAs, profit sharing plans, defined benefit plans, money purchase plans, employee stock ownership plans, governmental plans, 457 plans. Those are the big general ones that most people have. If they're working for the government, they have a W-2, they're an employee, all of that kind of works. There's a handful that could work if you're a business owner. I think the most pertinent ones, if you're a business owner, are if you're under 144,000, if you're single, is a Roth IRA and an IRA. You could set up a 401k if you have a W-2 plan set up with your corp, but that you're getting taxed. Same with the simple 401, 403bs. Those are now getting into government type plans. Same with the 457 plans. Those are typically like an annuity contract. SEP plans, simplified employee pension plans. Those are great for business owners up to, I believe it's 61,000 this year, where you can put away that money in a tax deductible plan. Payroll deduction IRAs, same. Profit sharing plans, those are great for business owners. Defined benefit plans. Those are interesting because they typically are really expensive. These are what you would traditionally think of as like a pension plan. And so you have the company, it's got a bunch of employees, they're unionized. You would like to, typically what they would do from the employee standpoint is they would take, I believe it's the last 3 years of employment. And so they would load up on their vacation time so that they can employ all of it there and get the most amount of money possible, so that these defined benefit plans would match them up to, in some cases, 80% of their entire salary for those 3 periods, which in some cases is kind of bankrupting some of the market. That's a whole nother conversation. But if you're a business owner and you do have a tax bill that's in the neighborhood of $250,000 or above, defined benefit plans, depending on your structure, could be really interesting and usable. Another one that's kind of in that same vein that isn't really listed here because it's not common and it's not commonly used at all. This is like specifically for number one, unique situations where people would require whole life insurance, which most people don't need it. And then secondly, if it's like to address an income issue where an annuity is the appropriate solution, which is not always the case. But if there so happens to be that kind of a thing, the IRS has another plan for that. They call those 412s. Those require insurance and annuities. Those are really weird, unique, and very expensive. Hence, that's why they're not listed here. In any case, the key takeaway with these retirement plans are putting away money, putting away profits, and putting away profits up to a certain amount. And so if you're a small business owner and you have $61,000 that you could put away, there's a 25% rule that's usually used with the SEP. So you're making three something in that neighborhood, depending on your state. And you can put away up to 61. What else could you do? Right? This is a great way to get you that advance on your retirement. I mean, $61,000, if you could do it every single year, compounded, right? Could make your retirement all the more likely, right? Assuming you're investing the money into something that does above average, right? You're going to more than likely be able to retire. Now, that's a question of what are you going to find that could do above average? Good question. Profit sharing plans are fantastic for creating succession planning with companies where you want the employees to own part of the company. I've seen a handful of companies start trading hands from ownership as they pass away, the old partners, and they sell their positions off into the new pool. And by use of the profit sharing, they're able to set up a separate entity to then buy into that part of the company. And it can get really interesting when investments are done differently. I mean, I've seen a situation where multiple holding companies were set up that the profit from one could kind of be grandfathered in to a separate trust where other family members were held as partners in there. And by doing so, would allow for the business to take some of the profits, take it in, and redistribute it in a specific way that was laid out by the original founder of how he wanted everyone in the family. And this is a pretty big family with a lot of members, and how he wanted everything to go about was done in this kind of a structure. Really interesting, right? Very complicated and just a good use of profits aside from being able to just generally reinvest in research and development by taking advantage of retirement plans and thinking about the future in a completely unique way. That's one thing. When done right, Peter Thiel being an amazing example of taking an IRA and backdoor IRAs and Roth IRAs and really turning tax deferred into a word of war where effectively figuring out how to use a Roth IRA to put investments now becomes something that government is fighting over because they think to a certain point it shouldn't be completely tax deferred. Again, separate argument, but it's the vehicle, right, that matters. And these retirement plans are just that, vehicles that offer that benefit on the front end, but then also on the back end, it's your retirement that we're talking about. That's really important too. So I think with that, when you're running your business, part of the things that you should begin to consider is how you're going to store capital. And retirement plans offer a really interesting way to accomplish that goal up to a certain extent, obviously. So I guess on the high end, those are those defined benefit plans at like 250, and there's a couple handful of other ones that are higher than that. But you're not going to be able to store $1 million a year with a retirement plan. That's not really what these are meant for. They are, however, good vehicles to let the small to medium that is growing into a large company with ESOPs, especially, um, reap the benefits of the structure of retirement plans. And come on, there's still a handful of days. If you've extended, you can still probably set one of these up. We like using Charles Schwab. This is not a promotion for them, but it's just really simple. It's an easy broker to use. Interactive Brokers, it's another great one. TD Ameritrade. Okay, you know what I mean? It's already been bought up by other companies. But point is like you could do this. It's really easy to fill out any of these online applications. There's nothing stopping you from doing this, except kind of your own lack of education and ignorance. I'm trying to help you here, let you know that on the tax side, this is a really effective tool to help you put away money and save some money on your taxes. Talk with your CPA, talk with your financial advisor, see if they can set something up like this. It's really easy. If they're charging you fees, run away. Management fees are disgusting for something like this. So like your Roth IRA shouldn't cost you anything. Your IRA really shouldn't cost you anything. Your 401k ideally should cost you damn near nothing. In some cases they do. 403bs, anything government like that, 457s, they're gonna be expensive. They're gonna charge you like more than likely they're taking it out of your union, but there's probably another percentage in there. I'm not too lucid on that. I don't know that one, but profit sharing plans, defined benefit plans, ESOPs, those are generally expensive to administer per year, depending on the structure, how big the company is, the dollar amounts, things of that nature. That's when it starts figuring out, like, on average, this is going to cost you $3,000 to like $6, $10, $20,000, depending on what's going on, how complicated the structure can get. Otherwise, you shouldn't be paying fees. You shouldn't be paying stupid broker charges. Set something up simple, really easy for you to do, easy for you to manage. You're the owner of the company. You should be able to figure out what are the retirement plans aside from your business accounts and things of that nature. And if you don't have something like that, you should be thinking about it, especially the younger business owners, 20s, most of the time don't think about this. 30-year-olds, some of them do. 40-year-olds becomes more apparent. 50-year-olds, sometimes it feels too late. 60-year-olds, the writing is on the wall. 70-year-olds, why are we having this conversation? I have had a retirement plan conversation with somebody who was 80 years old. Thankfully, he knew that this was more of a succession plan as opposed to like an actual, I need help retiring. That was fun. In any case, if you're running a business, make sure you have this vehicle. It's one of the vehicles that you can take full advantage of. With the advent of SVB failing, the option of having cash in a brokerage account is attractive, but don't forget of the benefits of having a retirement plan alongside something like that in tangent. And in terms of investments, I want to say one thing: the simpler, the easier. If you want average, get average. If you want above average, think above average, but don't overcomplicate.